Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest fighter prop precision on a daily basis. Welcome back for the long weekend. Again, took the yesterday off from the show, but back today, the rest of the week. Today, a topic is pretty exciting announcement from Michael Burry this morning. Remember, he's the professional investor from Scion Capital Management that was featured in the movie The Big Short, played by Christian Bale, who made Michael Burry made the epic call against the housing industry in 2008. And if you follow the movie or the book's actually a little better, you can kind of read about how he was almost knocked out of the game completely before he turned out to being right, and he was right in a huge way. So right now, he's been taking some pretty aggressive bets against a few targeted things in the market out there, not the market overall, but a few targeted areas. One of them is Cathie Wood's ARK Innovation Fund, which is ARKK, which has had a lot of success. Mostly last year. Again, tech has been a little bit challenged this year, has slightly underperformed the market, which means if you have a tech-only portfolio for the first time in several years, you are actually underperforming the market. That can, I'm getting some pushback there from across the board from some investors. I get it. I'm going to explain that, and we'll see what happens. But yeah, when you get a period of underperformance with tech, a lot of people will leave tech names, and then of course they miss the big snapback. Tech has the highest margins out there. I don't have to sell you on betting on technology, but certainly Michael Burry has taken a huge bet by buying some protective puts against the ARKK fund. So that's what we're going to talk about as far as our topic of the day. And then, of course, our question of the day for our academic portion, I will circle back to what is buying puts, how does it work, and the math kind of behind it to kind of show you exactly what he's doing. It's different than shorting the stock. He is not shorting ARKK. He's buying protective puts, and there's a difference in the way you handle the risk there, which is what we'll peel back during the topic of the day. During the question of the day. For our longs out there, I don't like too many of them today just because the market's selling off hard. You do have kind of the Afghanistan thing, which I'm really not going to talk about, weighing on the market. And I guess it's not just the Afghanistan thing, but it's what President Biden's speech from last night, I think, did not really hit the mark as far as a presidential speech. I guess that's an opinion, but it's largely a widely held opinion. So I can see the market selling off today based off of some of the stuff that he said. Regardless. So anyhow, when you get into day trading, I like the shorts better than the longs. I think we're going to have to sell today. In preparation for a further fall, is all I'll say about that. So our shorts out there today, Roblox, one of my favorite longs, actually, under the, just printing money, they missed earnings a little bit. And again, a decline in users. So some concerning numbers there. I'm not concerned long-term, but certainly the stock gets hit short-term. And then Futu Holdings, if you recognize that name, that's a Chinese name that's out there, that is in trouble from a regulatory point of view. It's also fallen more than 50% in the last month and a half. I'll show you the long-range chart there, and I think it can go lower from here. So that's what I have for today's show. If you're catching us on replay, thank you so much for checking us out. Make sure you subscribe, hit the notifications bell. If you want to join us live, it's only $25 to come on in the room, and you can ask me any questions you want through a chat window and a Q&A window, which you don't see. And with that, let's go ahead and get started. All right, welcome back, everybody, to Tuesday, August 17th. Here's our lineup card for today. Standard disclaimer applies as a financial education presentation. You have to do your own due diligence before acting upon anything you hear in this presentation. Full disclaimer information is available at OTOTnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. Well, we're talking about growing our money, but also, this is how you take a market short, which is how you protect your money in the case we need to start doing that and shift the emphasis from making money to kind of protecting what we have. I'm not making that call yet, but certainly there are times to do that. We saw it last March, and there's some different options, excuse me, there are different methods, I should say, to not confuse the terms, different methods of playing a market that you think is either overvalued or on its way down. And one of them involves the use of options and specifically buying puts against either the overall market or an individual holding. And in this case, it's an individual holding, the ARKK, which is what Michael Burry is doing. Again, Cathie Wood, obviously tech-heavy investor. She has all of her ARK funds, and of which ARK Innovation, the ARKK, is one of her main funds, if you will, out there. She's made her name on betting on innovation. So again, talk quite about the question today. We'll get back to that. Flow, long, short, open, short, long. We'll do the market review, headline review. Futures are in the red across the board. I expect that to continue. For long-term, ARKK is one of the names we'll take a look at, as well as Roblox, Coin, and Hood. Again, Robinhood and Coinbase if we have time. Both of those are Cathie Wood favorites, and you know I don't like those. So there's things I don't like in the ARKK fund, but there's a lot more that I do like out there. I do not hold ARKK specifically. All right, contingencies and academic resources are standard. Let's go over to TD Ameritrade, to Think Pipes platform. Here's how we'll be set up for day trading. We'll have the SPY on left on 1 minute. FLGC is a long marijuana company with a new acquisition. And then we'll have two shorts, Roblox you see here, and then have Futu Holdings. I just wanted to show you this chart. So we'll trade in a 1 minute chart, but there's a lot to this chart we can peel back. When you look at where we are for the overall market, though, again, higher and going high, high and going higher, if you will. So I think we're going to see a dent in the armor today. But just realize, you should always be prepared for a market to correct. So that's 10%. So if a market went down 10% from here, where would it be? Well, that's 44 off of where it is. So that takes it down to this 400 level. So even if we sold off 10%, we're going back to where we were basically at the end of March, early April. So obviously we don't want that to happen, but if it does happen, it's very natural for it to happen. That is not, it's not like we're going back years, right? We're going back a few months if it would start to sell off. So I do expect some congestion and then some selling going into tax reform, which we haven't heard much about. So here's where we are this morning, kind of gapping down off of the speech last night, if you will, and the situation in Afghanistan, which, it kind of is what it is at this point. There's no way to reverse that without, kind of gave up 20 years of progress in a few days. But yeah, it would take, another couple of decades. And, we heard that the philosophy last night is that it's unwinnable and, basically a waste of resources. So pretty tough words for the rest of the world that kind of counts on us to make a difference. But we shall see. All right, let's go to the headlines for today over on CNBC. Again, it's going to be dominated mostly by Afghanistan commentary, which is I'm going to try to stay out of that as much as I can. You see across the board over 0.5%. Asia in the red across the board. Europe, England's in the green. Everything else is in the red. Bonds basically unmoved there at 1.27. Oil selling off, getting a lot closer to our 40 to 60 range. So towards the end, as the summer kind of winds up, schools are starting to open. So you're going to see some of the summer travel go down. So again, the demand won't be quite as high going into the fall here. All right, for gold and silver, those basically unchanged. And then crypto, you see a bump in crypto back at, market cap above 2 trillion for the first time as Bitcoin kind of rallies and takes the market there, if you will. All right. Some headlines around the world. Apple and Tesla got an upgrade. The Tesla upgrades always crack me up. So Tesla is, I'm going to pull it up on another chart just real quick. Tesla is sitting at $670. This upgrade, this analyst upgrade, changed their price target from $180 to $300 and said it's a buy. That's pretty funny, right? And the stock's sitting at 670. Sometimes I don't get the analyst math or what they're thinking when they do things, but I largely think they are reacting to whatever has already happened in the market. And that's why I don't really put much of predicted value into anything they say. All right. Apple, though, Tesla, Robinhood, First Solar, all of those were longs and buy recommendations. All right, Moderna has been on fire. So have all the healthcare names that have been involved with the vaccine out there. Yeah, this 23andMe headline, I don't know. I think there's a lot. If you really dig into this, what they've done with 23andMe, I mean, there's been some unsolved crimes. There's been a lot of, that 23andMe kind of made connections out there that would not have been made otherwise. Obviously, there's been some people finding out they had families they didn't know they had. I mean, I don't know. I'm not sure it's quite the craze that everybody thinks it is. But it's certainly interesting. All right, here's the Cathie Wood, Michael Burry headline. Again, we'll look at ARKK here in a second. Home Depot just had earnings and is falling. You do not have to worry about Home Depot at all for long-term thought process and thesis. Yep, we're banning Taliban on Facebook. That'll teach them a lesson. All right. Again, staying away from Afghanistan commentary. Maybe I'm not doing so good at that. All right, Spirit darn near shot itself in the foot last quarter. It has basically cost itself $50 million and cut its third quarter schedule significantly to try to right size the ship there. I believe that was all manning issues that caused all those flights to cancel. All right, and that is it. All right, let's take a look at the ARKK chart real quick. So now here's where the chart is. Obviously, it doesn't reflect today, but I think that was the news yesterday when Michael Burry came out and it sold off there against it. So again, he's buying puts. So when you buy a put, obviously you buy the right to buy the stock lower than it is now. So it doesn't say where his puts are, whether they're at 110 or if they're like down here at 90. Obviously, the further out the put is, the more money you're going to make if you're right, and the cheaper it is to buy it. If you were to think of it in terms of insurance, which is what you would do in an overall market, if you were just to buy the puts against the market, you're basically buying an insurance policy saying, well, if it goes down below this point, I'm not going to lose anymore. Right, and you'll actually make money if it goes down far enough. So anyhow, that's what's going on here. When you look at this chart, though, you have this big, huge run up at post-election. Cathie Wood was the hottest name ever. Went up to 160, came basically all the way back down to touch 100. I think 100. There's enough resistance here. This was 4 or 5 days of high volume buying right here at 100. I think basically I would be shocked if it would break down below 100. But with Michael Burry behind a short name, it probably will continue to sell off and get down here below 110. Below 110 is probably about the buy zone when you want to start flipping from, okay, I realize the stock's getting bet against, but at some point, if it's got resistance, you get that asymmetric upside, right? So below 110, you've got $10 to the downside and, 50 to the upside. So I like the way that's set up. Other names that are inside of ARKK are Robinhood, which again had the big move up and has been kind of selling off, and I'm not that big of a fan of that as from a long-term name. Another one I'm not a big fan of was Coinbase. Again, got greedy at the IPO, sank all the way down to 220 range, kind of bounced off of that. Now it's back up to 280. It's been 280 and then now at 250. So it's gotten some love lately, but certainly not everything that they had hoped for. And then the last one we'll take a look at before we switch over to the open is Roblox, RBLX, which again, now I do like this name long. So there's the chart. So you can see kind of a mixed review as far as innovation charts that are all inside of the ARKK. All right, give me a second. I'll get set up for the market open. Good morning, everyone. Welcome to the On Time on Target play of the day. There's the opening bell for Tuesday, August 17th. Futures are in the red and falling, so it makes me want to look at the shorts. That's what we've got for the S&P 500 off to the left. We had Tesla in here. That's not the long we're looking at. FLGC would be a long. If we want it, you can see it's up 7% there. As far as Roblox, pretty strong name, even though it had a user decline and negative earnings. So not really inclined to, even though it meets our criteria, not really inclined to try and short into Roblox. But I do like this Futu Holdings. Again, a month and a half ago it was at 80. It just dropped below 90. So when we go in here and look at the 1 day and 1 minute, trying to get an entry on this, that's a pretty tough high of the day. To cover 86, your entry point would be at 85, which is already below that. So we'll see. We would need this to back up a little more before we could take an entry on it. Certainly can't take it right there. Roblox, I think, is just too strong to short. You're right at the entry point, though, if you were to try to short it. 70 cents, 75.10. Look at that thing striping down. You'd need it to move $2.10. It'd have to be down 73 even if you were to try to short this right here. FLGC, again, selling off. Could we turn around and take this long? Well, you could, but you're facing a lot of negativity in the market, so I would not try to do that. And then our other one, DNMR, Danimer Scientific. I'm not as familiar, but the headline was juicy. Strong Q2 results, which you can see back in here, and then almost a 10% move up in the stock. Again, not really interested in taking anything long this morning with the market basically striping down for two red minutes here. And make that 3. All right, so don't really see anything to trade here. If you do see a trade, go ahead and throw it into the window and I'll take a look at it. But I'm gonna zoom back out and take a look at how the overall market's doing. All right, we have what, 10 to 12 names, even less now, less than 10 names in the green here. One of which is GLD gold, acting opposite the market. So, and then the rest are basically specs. And FMB does one of our bond funds, that's municipal bond fund. It does act slightly against the market. It only moves a couple pennies a day anyway, either direction, but that is up as well. To the downside, all right, let's see, leaderboard, Roblox, Alibaba down 4%, KWeb down 4%, just a house of pain, Didi down 4%. All right, Home Depot, DXC, NEO down 3, almost 4%. So a lot of huge names out there. Tesla down 2.5%, Palantir down a couple percent. So that's going to put some pretty ugly numbers in the portfolio today. So just be prepared for that. All right, not really interested in selling Alibaba here unless you talk to me about it, and then I'll sell it. But I'm not selling it on my own accord because I think that pretty close to the bottom being in. You won't pick the exact bottom, but I'm not worried about it. All right. That is it for, let's look back at the day trading charts. DNMR, nope, you just can't take it long here. Roblox, it would need to go too far, and it's too strong a name. And then the only one you could even really try to short is Futu, because who's buying it here? But again, it didn't set up correctly, so the math doesn't work for any of that. So, all right, so we're going to bail on that. I do want to come over to take a look at this protective puts or betting against something by buying puts, and we'll take a look at it. So, prices plunging, question, buy a put. So why would you buy a put versus short the stock? It's risk management. So if you buy a put, you are paying money up front to bet that the stock is going down. Or if you're going to buy a put in the overall market, you'd be betting that it's all going down. Whatever you pay for the puts, say you have a $100,000 portfolio and you spend 2%, you spend $2,000 on buying protective puts out there. It's just like insurance. You hope to pay for it and you hope that it was a complete waste of your money, right? Because you don't want the actual event to happen if you're buying as insurance. If you're betting against something in the same portfolio or the same scenario where there's $100,000 in your portfolio, you're taking 2% of that and betting that the whole overall market's going down, then you do want it to go down so you actually can make money off of that 2%. So again, the options would make money and they would outweigh the money that the rest of the portfolio has lost. So again, there's a lot of math involving in how much insurance do you buy in that case, or how much do you bet against it. But again, your losses are limited. Now, if you talk about actually shorting a stock, you get into a situation where, if you could lose, really unlimited amounts of money. If you short a stock and the stock doubles, you would lose 100% of your money. If it triples, you lose more than you have, right? You get knocked out of the game, and that's where shorts get in trouble. Is at least when you buy a stock and it goes to zero, all you can lose is the money you spent on it, right? If you're shorting, you can lose more money than you have and more, right? So you start hitting margin calls. Obviously, the brokerage isn't going to say that, hey, that's okay, no big deal, we'll cover it. No, they're not going to cover it. They're going to start randomly selling not randomly, but they will start systematically selling your positions as you hit different margin calls out there, and then blow you out of your position with red flags all over your account if they have to do that. So obviously, if you're getting into that ball game, you're either not paying attention or you're playing with fire and you don't really understand what you're doing. So anyhow, let's see what Investopedia has to say here. Concerned the stock market will fall, you can buy put options, grants the right to sell an underlying asset at a fixed price through a predetermined time frame. We'll look at the actual example below, because sometimes it's hard to understand. But basically, your take on this situation is that you are that the position is going down. So in this case, Michael Burry saying ARKK, that fund that's sitting there at 120, is going down in a specific time frame, which we don't know what that is because it wasn't published what he bought out there. You can probably find it on the interweb. Somebody probably did the math and looked at the high volume yesterday, and you could find out exactly what strike price is at, but not important enough for me to look it up. All right, gives the right, not the obligation. So that's the difference between futures and options. Is you have the right, but futures you actually do have to take delivery. So a big difference there. Prices will vary. Yes. So long puts. So say you're right, and whatever happens, again, you can sell the put prior to actually exercising the contract. But we'll see. It generally rarely makes sense to sell puts early or calls. Once you've made most of your money, you might want to unwind it and get it back out. So anyhow, here's a chart for you if you want to go through the chart. The chart's never really made much sense to me as far as explaining it, so I like to use a real world numbers example. So you have a stock ABC, it trades $100 per share. There's a 1 month put out there that is for the $95 strike price, which trades for $3. So in this exact scenario, if you were going to bet against ABC stock, you would have to pay $3 to buy the right to buy the stock at 95. So in other words, so how far does this thing have to fall? We have to do some math. It has to fall all the way to the strike price, and it has to fall, the amount that you ended up paying for the put. So this thing has to go to $92 before you make 1 penny. Okay, above 92, you lose your investment. But before you make 1 penny, it has to go to 92. So when you look at something started at $100 a share, this is a 1 month put. So this all has to happen in 1 month. This thing has to fall 8% in a month. Yeah. So that's why I think it's more gambling than anything else. But obviously, if you think it's going to fall, this is one way to make your money. And if you're wrong, all you lose is this $3, right? If you short the stock and it goes to 200, well, you've lost everything, right? Every dime you put in it. So you can go through the break even stuff here. Now, generally what happens is you get into a close versus exercise scenario. If you're wrong, you're and the stock just goes higher, well, the put's going to expire worthless, and like 80% of options expire worthless, right? Because there are these kind of bets on something extreme is going to happen. But when you're right, you can have two options. You either close it out and sell those rights prior to the actual expiration, or you can just hit the expiration and exercise, and at that point, you own the stock at that particular price. So, all right, that's all I'm going to cover with options out there for today. So again, market has bounced a little. It's not just selling off, down 0.5% across the board. Wouldn't be surprised with all the drama in the air over Afghanistan that that it continues down for the day. I would not be surprised at all. All right, that's all I have for today. We'll see you guys back tomorrow morning. Have a good one. Bye.